Tuesday, December the 3rd. This is Business Morning with me, Bosun Omofaye, and we welcome our viewers here in Nigeria and around the world. Now, the World Bank on Monday released a new update on the state of Nigeria's economy, highlighting key challenges and key priorities for the government in order to achieve inclusive growth, unlock the country's productive potential of the country, its people, and resources. So joining me live now from our Abuja studios for this first and exclusive interview on the new report are two top officials of the World Bank here in Nigeria. Welcome the country director, Shubham Chaudhuri, and the country lead economist, Marco Hernandez. Gentlemen, welcome to the program, and we appreciate your being here today for this interview. So let's get started with Shubham, who is the country director. Good morning, welcome to the show.
Good morning, Bosun.
Thank you so much.
Us.
So, give us an overarching view of the Nigerian economy among its contemporaries in your position as the World Bank's country director.
Basically, we see Nigeria as having, Nigeria is the largest economy in Africa. It's the largest country in Africa. And we see Nigeria as having tremendous potential. You've got a young, growing population, tremendous resources. But to be entirely frank, Nigeria right now is yet to realize that potential. And that's essentially the challenge and the opportunity that we see here, that we're here to help the Nigerian government and the people work on. If I may say one thing about the World Bank, as you may know, the World Bank is actually a development cooperative, which helps its member countries, Nigeria and 188 other countries, to eliminate poverty. That's our basic mission: eliminate poverty and boost what we call shared prosperity, which means basically better jobs, better lives, better opportunities for all of its people. And we work very closely with government. All of our financing goes through the government budget. So in some sense, it's really no different from the other sources of funds that the government has. And we try to supplement that financing with close implementation support. So that's what we do all over the world, and especially here in Nigeria. Nigeria is critical to the global mission of reducing poverty.
Shubham, if you look at Nigeria's economic performance and situation vis-a-vis its contemporaries around the world, you've been a country director for the World Bank in Afghanistan and a few other countries. You have a professorship in economics. So if you look at Nigeria's, do you think this country is pulling its weight regarding vis-a-vis its resources that are available, both human and material?
At this point in time, I have to say, no, it's not. And I think that's not news to anyone here. I think I see every person I've talked to, whether in government or in civil society or academia or in the private sector, I think we all recognize Nigeria's potential and the fact that that potential is currently not being fully realized. I spent 5 years in Indonesia. I come from India myself, and Nigeria reminds me a lot of Indonesia and India in terms of the potential, which India and Indonesia are now beginning to tap into. And for Nigeria, that journey is just getting started. So in short answer to your question really is, look, Nigeria, in terms of its peers, which I would consider India, countries like India and Indonesia, in a large, multi-ethnic, robust, and perhaps noisy democracies with lots of resources, tremendous human capital, Nigeria, compared to peers like India and Indonesia, is still not quite there, but the potential is the same. And that's what we're here to help on.
Let's talk to Marco, who is the World Bank lead economist for Nigeria. Marco, you are the author of this report. So is there any difference in what is contained therein from the previous one?
So first of all, good morning to you and your viewers, and thank you for having us. So I think that in comparison to previous reports, what we see is a gradual recovery in growth in Nigeria. We're expecting growth to reach 2% in 2019 and to go up to 2.1% during 2020 or 2021. But of course, this outlook is still subject to risks, both external and domestic. On the external side, if trade disputes continue globally, or if there is a change in investor confidence that may change, the pace of global interest rates, that could affect growth. But on the opposite side, for example, higher oil prices could also boost growth in the country. But I think that most of the potential will come from what Nigeria could do domestically. So if it's accelerating the pace of structural reforms, or also, for example, increasing much needed domestic revenue so that we can invest more in human capital, in transportation, in other infrastructure, I think that potential could increase and, of course, improve that outlook. On the other hand, of course, there are also domestic risks that some of them that have been rising, which could include the security situation, but also the pace of reforms. If that's not fast enough, then that, of course, growth may not materialize.
So if you look at the last report, because this is biannual, twice a year, have you seen any significant uptick from what the government has been doing that are incorporated in the new report over the last couple of months or so when the last report was released? Marco?
Yes, so if we compare to, for example, what has been happening in the recent month, I think there is some positive news to take into account. On the one hand side, there have been improvements in, for example, business regulations to try to move in the doing business ranking. The country was around 169th only 2 years ago, ranked in the world, and today it's 131st in the world. That could incentivize investors to come in, new firms to put the resources into the economy, and of course grow. There has also been important signals on the trade side with the signing of the Africa Continental Free Trade Area Agreement, which I think signals the potential that Nigeria has to become a leader in continental growth and integration. There are also other reforms on the digital sector and what's happening also in social protection systems to make sure that when workers are not available to find jobs, they could be having possibilities to get back in the game, so to speak. But on the other hand, there have also been news that have affected or the investor confidence, and I think that leads to the overall predictability of economic policies, for example, the recent border closures.
Okay, let's start to drill down a little bit more with the country director, Shubham. When you compare Nigeria with Indonesia and Malaysia and India and all that, you look at population here, you look at unemployment, you look at poverty. So if you put all of this together, and what do they really mean for a country such as Nigeria trying to achieve inclusive growth, trying to unlock its productive potential?
I think, Boson, the one thing, similarity also that I would stress is just the largeness of the economy and the diversity of the country. Diversity both ethnically, in terms of agroclimatic conditions, and just the state of economic development within the country. So these are challenges and as well as opportunities that both India and Indonesia have that Nigeria shares, which is, dealing with the largeness and diversity of the country. Now, in terms and population, obviously, Indonesia and Nigeria are similar. India is a bit larger. The main thing that I see in Nigeria, which reminds me of where India might have been, say, 20 years ago, at the beginning of the liberalization period, is really what government is doing or could be doing to really unlock the productive potential of private firms, entrepreneurs, young people. Right now, and some of these things, Nigeria in the last, as Marco mentioned, has done well in terms of starting to work on enabling business reforms, creating the space for businesses to establish themselves, to grow, to invest, to create jobs. And that's the kind of the main step that we see going forward, which would get Nigeria up to the kinds of growth rates that India and Indonesia have enjoyed in the last decade. I should point out that, both in India and Indonesia, this did not happen overnight. It took some time. In a large democracy like Nigeria's, like India and Indonesia's, building that consensus within the public, within different parts of the country, with different parts of the government, that we really need to focus on doing what the public sector does best, which is to create a level playing field and the space for the energy and the dynamism of the private sector to come in. I think that's really the key next step for Nigeria. Second, on domestic revenue mobilization, Nigeria does stand out in the sense that the government revenues to GDP, if you look at both at the federal level and at the level of the states, is still extremely low. It's about 8% of GDP right now, whereas in a place like India or Indonesia, you're talking closer to the higher teens, if not in the 20% of GDP. Now, why does that matter? That's because government revenues are needed to do the basic investments that only government can do, both at the state and federal level. These are investments in Nigeria's people, in basic education, in primary health care, in secondary education, in training and skills for Nigeria's burgeoning youth population, and then investments in infrastructure. So if a farmer up in Kano produces, lovely tomatoes, but they can't get to the markets in down south, or even you don't have the power to kind of have processing factories up in the north, then that full potential of Nigeria's people and resources won't be realized. So those are the two things. You need the domestic revenues so that the government can invest in people and infrastructure in a way that only government can. Everything else, leave to the dynamism of the private sector.
So, Michael, in terms of what you call national productivity here, we have one of the lowest productivity, and this was highlighted in the report that you authored, put together through various sources and all of that. So if you look at raising Nigeria's productivity level, where do you think the fault line really is here for the country?
So I think that when we talk about productivity, is first, why do we care about productivity? And I think it's because it not only can help us to boost economic growth, but also to achieve a pace of job creation that is faster, but also more inclusive. This means better paid jobs for the population. And right now, Nigeria, on its productivity levels, is hit from two sides, so to speak. On the one hand, we have lower levels of productivity when it comes to agriculture, to industry, and to services in comparison to, for example, other upper middle income countries. But in addition, we also have more people working in sectors that have lower productivity. So for example, if we take the case of agriculture, about 40% of the population in Nigeria works in agriculture. This compares to between 12 to 15% in other upper middle income countries. So the idea is how to push reforms that would help us to, first of all, make the transition of workers from agriculture towards higher services, also higher value-added services and industry as well, and also to make sure that the productivity of each one of these sectors, for example, even including in agriculture, could increase, because that would help to raise incomes, which of course will boost consumption, which will generate ideas for entrepreneurs to come into the markets, even in the digital economy, and generate a vibrant society that could not only grow faster, but more inclusively. So the areas of reforms that we highlight, I think, could be put into some buckets. On the one hand side, ensuring macroeconomic stability, a critical condition or a precondition for growth and job creation. The opportunity to invest in people, as Shubham was highlighting, critical importance to do that in Nigeria, and to do that throughout the life cycle. From the early years when you have a baby that needs to be nurtured and get into early childhood development, to getting into primary and secondary school, and even all the way up to when you're in a formal firm, and for firms to actually invest in that education as well. So that is critical. And the final point, of course, to make an enabling business environment that is suitable for investors to come in, to put resources, to risk their resources in the search for profit, and as a result, also boost job creation.
Shubham, the report released yesterday talked about needed structural reforms for Nigeria, without which the country face likely recession. Again, if you look at oil prices and what and all of that, including a number of highlighted global headwinds. So the Nigerian authorities believe that adding more debt, creating more debt to the global window is a way to go. What's your take?
I think basically it's a question of what Nigeria needs additional financing. I think to do the investments to kind of make sure that the economy is in a place to kind of to be resilient to headwinds that are faced, Nigeria will need more financing. But the structural reforms that we're talking about are structural reforms that have to do with raising more revenues, improving the quality of spending. Think about every naira that the government spends and say, could it be spent better in terms of preparing, opening the space for firms or preparing Nigeria's youth to be more productive workers and contributing to the economy. There are things which are purely macro, have to do with the macro kind of policy environment and the macro fiscal framework. Marco mentioned some of those. These are what we think of as preconditions. Now, when we talked about the risks of a potential recession, I do want to make it clear to you and your viewers that we're not saying that a recession is around the horizon. We're saying that Nigeria is in a place right now where there's lots of upside potential, but there's a vulnerability to global headwinds, as we said, in particular downward movements in oil prices. And what can Nigeria do to prepare itself? Part of what can do, obviously, on the macro front is to ensure that the exchange rate is a bit more flexible in terms of starting to, so that you don't get stuck in a corner that many countries do, where the exchange rate is at a level which becomes unsustainable after a point. So it's a bit like a pressure cooker. A pressure cooker always has a release valve at the top, and you want to make sure that the pressure is slowly letting off, so the situation doesn't get to a point where all the pressure builds up. So on the exchange rate, that would actually help, in terms of providing some sense of, here's this kind of more stable and sustainable macro path going forward. I think the other thing on the domestic front is really thinking about how to get credit to the private sector. I think the central bank has adopted many measures to try and kind of direct lending. I think they're doing kind of the aim. Private sector needs more finance. That's clear. I think we're all clear that we need to figure out ways of getting finance. The question is, what are the ways of getting finance that are going to be more sustainable? And that really should come from the operation of the private financial sector, rather than perhaps having much more of a directed public role, because that ultimately will not be sustainable.
How do we get Nigeria this debt issue? The World Bank, the World Bank is one of the multilateral agencies. Nigeria is securing about $500 million into its power sector, for example. So Nigeria is still borrowing. So the biggest conversation on the main street right now is Nigerian authorities looking for additional $30 billion from outside the country to ramp up on infrastructure, on healthcare, on education. Some of the areas you talked about that the government needs to invest. So which way should Nigeria go here? Or do you think there are other options that the federal government can undertake without onboarding more external loans?
So I think the first thing to take into account is that the needs are vast, and of course there are different options. From the World Bank side, we work through government, so think of our resources that we provide as just an additional source of funds for the authorities. The authorities have the opportunity to mobilize their own revenues, to borrow from the commercial markets, which tend to have higher interest rates, and then to also borrow from multilaterals and other development partners like the World Bank, which tend to have longer maturities, grace periods, and of course interest rates that sometimes are closer to zero. So taking that into account, I think that when we talk about the size of the current budget in Nigeria, we see that it may not be enough to cover for all of the needs. So some of them we have been discussing already, whether it's transportation or education or health, nutrition, etc. And when we put all of those things together, we have to take into account two critical things. So on the first hand is whether a particular debt that the government is taking has the potential to boost growth, right? And in itself, of course, get the economy moving and therefore, making that debt to be sustainable over time. And on the other hand, that debt is managed very carefully. So when it comes into the type of products that the government selects, the maturities, whether it's a borrowing domestically, borrowing externally, and so forth, I think all of those options will have different balances. And this issue of the pressure cooker, not only in terms of the level of the exchange or how the exchange rate gets managed, I think it's also on the side of fiscal resources, how those resources are allocated, not only to make sure that we get the best bang for the buck for every naira that the government spends, but also when we're getting additional nairas, whether it's through debt or other means, like for example additional revenues, that we do so in the best possible way.
A final 30 seconds from the country director, I'm sure is going to have the last say on the show. Shubham, how do we stabilize, consolidate, and accelerate within the short to medium term? 1 minute, less than that. You have any idea for us?
I think I would stress three things. One, kind of providing policy clarity and certainty in a number of critical areas. Power is one in terms of the overall business climate, in terms of the enabling reforms, regulations in different sectors. And I would also say in terms of the cross-border trade. So I think providing the policy clarity and certainty, that's one. Second, finding ways of raising domestic revenues and initiating the necessary investments. That's the second. So those are the two things that I would stress and these are urgent things. They're immediate steps that can be taken. The finance bill right now, in terms of what it's doing for the VAT, et cetera, would help. In terms of debt issuance, if I may say one other thing, it's really, you want to borrow in a very transparent way for things that there will be a national consensus about, And you want to be, also look at the current budget and see, are there opportunities for redirecting spending from uses that may be suboptimal right now, are not giving you the developmental return that you'd want. So those are the two key things that we will continue to work with and support government on.
Okay, Shubham Chaudhuri, thank you so much, Country Director for the World Bank, and Marco Hernandez, the lead economist for Nigeria at the World Bank. Thank you so much, gentlemen, for being here this morning. We appreciate your speaking with us here on Channels Television.